Okay. All right, thank you everyone. Thank you for coming to the class product updates for the March to June quarter. Now, my name is Paul. I'm the product manager for Class Super. As part of product manager, my role is looking at the product roadmap, product development, making sure that we're bringing the right features for our clients to enhance their experience, to solve some of their pain points, and in essence, deliver the product features that you see in each release. A bit about myself. I've got a commerce, law, and taxation degree, and I've been working in the accounting tax industry for the last 10 years. So started as an accountant and slowly morphed into software development and superannuation. Today I'll be going through the class features for April and June. Now, because we haven't had one of these webinars for this year, I'll also be covering some of the features that was released earlier in the year, specifically to do with tax statement automation. This is one of our major features that they've released, and actually ties in very nicely with some of the work that's coming through at the end of the year as part of the year-end process. So I'm going to cover some of those work as part of this webinar. So just before I start the formal presentation, a couple of housekeeping. You'll have opportunity to ask questions through your webinar panel throughout for the presentation. We will have someone answer that question and actually send out responses to the question after the webinar. The webinar itself will be recorded and made available to all of you via our website. And at the end of the webinar, we will conduct a short survey to receive some feedback about the actual webinar today. So now before I start, part of the product management team, we're always keen to get feedbacks. So one question we want to know from all the attendees is how do you find information about our new class features? Some of the options you have is release notes emails, the release notes class pop-up. So these are the pop-ups that you get when you first access the application after a release to show you what's new. Or it could be the class user guide, or if you don't know, that's a perfectly acceptable answer. And we're just trying to look at sort of what's the best distribution channel for our clients to get access to these materials. So I'll open up for about probably 10-15 seconds. Hopefully that'll give you enough time to put in a response. All right, thank you so much. So I've closed the poll, and thank you so much for those that have participated. Really will help us with our research, improve the distribution channels that's available through promotion of our new features. Now, we get to the main part of our webinar, which is the content. Now, there's really three main things I want to cover, and these are recapping the main features that we have released as part of the last 3 months and for the sort of early part of the year. Now, there's probably other features that we released that we have put in our release notes. One thing before I start is you'll find that our release notes have changed slightly. There's actually more details in there about all the smaller stuff, like a lot of the bug fixes and enhancements that we have done. I'm not going to be able to go through every single one in this webinar, but I really do advise you to go through them, and you'll find some of them you may know about or you may not know about, but they all are small increments that we've done to help improve the client experience. So the three things I want to go through is the piece we released back in March on tax statement automation. This is where we've for those that sort of been touched, a process where we've automated the processing of tax statement components for directly held, widely held securities. So this includes ETFs, some of the managed funds, listed securities, and what we've done is actually create an automated process for you to process tax statements in bulk. And we'll go through that briefly, because what you'll see is this will be really available for you for not just the 18 year, but as we come into the 19th financial year, when the tax statement becomes available in sort of August, September, you will have full use of this tax statement console for a full financial year. So we're quite excited about that, and a couple of improvements we've done along the way to even enhance that experience. The second part I want to talk about is a whole raft of enhancement that we've done back in April on the transfer balance account reporting and total super balance. And there's no surprise why we did it at that particular time, because it was to coincide with the ATO rollout of the ATO Online. And as part of that process, what they've done is actually expose all that information to the tax agents via that tax upgrade. And so it's even more important that we have the correct features for you to, one, be able to actually track these concepts, and two, maintain accuracy, and three, allow you to adjust for any discrepancy with the ATO. And as you'll probably find that as you've lodged the 2018 annual return a couple months ago, you'll find there's more and more importance that you have a essential information between what the ATO has in relation to TBAR and TSB, and what you have in class, because that drives a lot of decision making that you can do, not just for the current year, but also for the next financial year. So we'll go through all of those changes. Some are very visible, some are very minute, but I just want to point out that we will really enhance this piece to actually give you better functionality and to allow you to actually track some of these concepts. And the last thing I want to go through is the compliance and tax time 2019 changes. And this is part of the super reform measures that came into force sort of the last couple of years, but a lot of the measures that introduced start on 1st July 18, and the sort of the unused constitutional cap, which has to start on 1st July 18, but you'll probably first see the effect of it from 1st July 19, a couple of days ago, and then how that then ties into the actual tax return. Now, we won't be going into much detail with these ones, because we have a whole number of training sessions planned for year-end processing, which capture a lot of these concepts, and we'll have further sessions to go in more detail from a compliance and a process perspective, how you go about doing so as part of the year-end process. This is the purpose of this webinar. All this concept is to actually create some awareness for you guys as to some of the features we introduced, and see how you can use that to further enhance your experience with class. And last thing I'll go through is some of the feed updates. Now we won't be demoing anything, but I'll just be highlighting some of the main improvements we've done in the feed space, and we can definitely provide more detail if you require. Okay, tax statement automation. So it's the first topic that I want to cover, And this is one of the big feature that we worked on. We launched this back in SPA in February and a general release in March. And we identified that the processing of tax statements has been a pain point for our clients for a very long time. And due to the delays in getting the necessary information through different providers, and the fact there's no centralized source of data for tax statement, means that it's been an ongoing delay, frustration for our clients. So what we've done through data aggregation is source the underlying tax statement templates that they're actually used to come up with the actual tax statement components, and utilizing the cash distributions that's recorded in the system for your particular funds to actually turn those from ratios into actual tax statement components that then allow you to process the tax statement events. And what we've done recently in the June release is add also the ability for you to upload document through a tax statement console. And we're looking at further improvements in this area. So it might be good if I just take you back to take you to class to have a look at how the tax statement console works, and hopefully you had a chance to actually play around with that. But I know that for a lot of people, you may have reprocessed your tax statement for the year when we released. So this may be the first year where you've actually will use this in bulk. So the good thing is when you go into each of the fund in the periodic processing, there will be a tab called tax statement console. The reason why we put in periodic processing, because we see this as a year-end process where you finalize all your cash distributions, you match it into cash, you've all the amounts all been finalized, and then as you can see, this console will show you all the tax statements that you need, so all the security that you need tax statement for. And please note that we've only included in this phase directly held security. So anything that's not held through a wrap or platform. The wrap platforms, for many of them, will receive tax statement data through data feeds, and that process has not changed. We'll be looking at further enhancements in that space to see if we can increase the actual automation. But currently, these securities are those that are held either directly and through a broker, and where you're actually getting tax statement directly from the actual providers. So I'll hear 6 securities, very common: TCL, STW, Company Vanguard, and they probably account for a majority of our security that requires tax statements. So what this console does, it shows you the actual holdings, it shows you the number of distributions, so you know that if you miss one, for example, if he pays quarterly, you know, okay, to chase something. And then the other thing, it shows the amount of distribution that's actually processed. So this is the actual cash distribution that's currently in the class system. And here we're looking at what the distribution cash business event to detect what the total amount of cash. The next column called tax statement processed, I can see is in light gray. It's because for all these securities, because I'm looking at 17, 18 year, we all have tax statement template for, and therefore we've actually pre-populated the tax statement component template data into the actual events. So maybe I'll take one of these, and as you can see, this is the VAP Vanguard Property Security Index, and you can see in here we've got the actual the table of cash distribution that's currently in the class system, and so therefore we take that information and based on the component ratio that we've computed for each of the securities, actually split the total cash distribution based on the different tax components. So importantly, what that means is the numbers you see here should there probably be a small rounding difference, but in essence match what you receive from the paper tax statement directly from Vanguard, which means that instead of trying to figure out which number goes into which box, and as you appreciate the introduction of Emmet, and I can do a whole webinar on Emmet, but my point is it's no longer as simple as one-to-one translation to the boxes. It's quite a complex process, and we've done all the heavy lifting and actually created this template for you to actually populate tax statements. The other thing that you probably realize that this event looks slightly different to the traditional, the original distribution tax statement event, but looks also very similar. And the reason why we've done that is we've got two tabs here, which is annual, which is the default tab, and per distribution. And what this does is there's a small number of funds where, for example, when you do have, and the typical examples, multiple ECPI periods throughout the year, where instead of creating a single tax statement 30 June, you may be required to create multiple tax statements throughout the year. So each of the tax statements fall into the correct ECPI period that previously trying to manually split out each of the tax statements and create separate distribution tax statement events was a very painful process. Easy for machine to do, but very hard for human. So we've actually simplified that process by actually creating each of the underlying tax statement on a per distribution basis. And if you click this box, what we actually do is actually create the, probably I'll go back, is creating the one big tax statement at 30 June, actually creating, in this case, 5 separate tax statements, each on the cash distribution dates, which for a fund which has multiple ECPI periods will be a bit of a godsend, I believe. So that's really a very helpful process to do. The other thing that we've done is we've got this unreconciled distribution box, which is also new. Now this is really helpful when you're trying to manually enter these numbers in, because unfortunately we don't support all the directly held securities that require tax statement. But if you were going to enter manually, and let's say you change this number, this automatically tells you what's the difference that you need to add somewhere else. So definitely not trying to work out how much number is that. I can then, okay, I'll put that numbers in here. And then once that's 0, you are able to submit the event. So it's a really simple process. And I think once I've submitted, it goes into complete. Now the source says manual because I actually changed one of the numbers, but if you don't, then it should stay as auto-generated. Now the console is designed to give you a some level of control that you can actually go in one by one with your paper tax stamp initially and check and to see, make sure the numbers that class produced are actually correct. But what our clients, the feedback we got clients is after a little while, they're actually very comfortable with what we've done. They're very comfortable with the results they're seeing. So then all they need to do really is have a quick check, and we'll basically give them the ability to go generate and then generate this in bulk. Now, one of the issues that we're working through, but is that for certain stable security like TCL, as you can see, are probably very common. That due to the ways that the income event operate at the moment, you may need to actually change, update the income announcements to split the dividend and actual distribution. So we're aware of the issue, and actually we are actually working towards resolving that issue. It's partly to do with the way that we get information from our data feeds, and also the way that the income event is generated. So in the meantime, we've given you a warning to say, make sure that you have reviewed your income generation events, to make sure you have the correct breakdown of dividend and distribution, and make sure they're allocated to the right year. Once you've done that, the tax statement preparation should be very accurate. We're hoping to resolve this issue in the next few months, and then therefore you'll have a very fully automated solution for producing tax statements for both stable securities and for the rest of the securities that require tax statements. So I'm going to say yes to that. And what it does is actually just go through the remaining, in this case 5, and actually create them all. So you can see the amount of time saving that we've done, and you have all the tax data in one console that you can actually track and actually see what you've done. So it's actually a very useful feature, and the feedback we see is very positive on the amount of efficiency that our clients have gained, and importantly, the amount of transparency and accuracy that it has produced. So if I go to the 18-19 year, you can see most of them that will stay manual. So just a heads up, our team is busily sourcing information, and when the data becomes available for the tax statements, we'll be able to actually analyze and actually make those tax statement templates available. And when they do, those statuses will update from manual to generate tax statement in blue, and when that happens, you'll be able to actually generate those. So it's importantly, it's and we actually have a user guide page that go through all the securities that we will be doing research for, and generally it's those that have more than 100 holdings in class. Now the process for, if you have any securities where you like the data to be available that we're not currently supporting, there is an option. You're able to actually email us the paper tax statements, and we'll be able to actually extract the ratio and then make that available through our centralized database. And so that's another option that you actually have. So that's pretty much just what I want to say about tax statements. It's actually a very powerful feature. So I will move to T-bar and total super balance enhancements. So as everyone appreciates, T-bar was very new, and a major implementation of T-bar was done back in June and July last year, when the SMSF were required to report the opening balance at 1st July 2017, but the reporting date was pushed back to 1st July 18, and then following that, any of the events that triggered a reporting T-bar event to be sent to the ATO. So it was all very new for you guys, and also new for us as well. Now, throughout that journey, we learned a lot about how the ATO were treating this, and the ATO themselves also realized that in essence, our clients weren't having the visibility of data that they need to actually track and manage this this process. So as part of the ATO online updates and revamp of the ATO portal, which many of you would have used for a very long time, ATO actually included the total super balance and transfer balance account information to the taxation portal. Now, those information have always been available to the actual individual through MyGov, but obviously the ATO realizes it was very difficult for the clients to for the tax agent to get their clients to access these information, and importantly, it was hard to actually get them to log into MyGov and actually provide that information. Now the limitation currently that we have, which is a very much ATO authorization issue, is the transfer balance information and the total super balance are actually linked to the particular TFN of the individual. Now, what that means is if you're a tax agent for super fund only, it's actually very hard for you to get access to that information. The ATO is working towards that. So for class, our main goals in all these features is making sure that, one, we've got a sufficient mechanism in place to track and calculate your transfer balance account information at any particular time, and for total super balance, making sure that it's accurate at 30 June of each year, which is when the TSB gets determined, which impacts what you can do in next financial year, and then bubble it up into the member console so you can do tracking and filtering and planning around that. Note that the information that ATO has, apart from the external balances that they may receive from other funds, in essence come from two areas. It comes from the TBAR record that you lodge from class, or it comes from the annual return that you actually lodge as part of your yearly compliance. And what that means is our recommendation is not to actually rely on the ATO data for your full planning, because if they only receive information through those two channels, that means some of the data they have could be a year old, because you don't lodge return until 15th May of the next year. Your TBAR could be lodged at the same time. So class, as a matter of speaking, probably have the most accurate information from a TBAR and TSB information for you to make some of these decisions. So I'll probably go now to class to show you some of these changes. Okay. So for those people that don't know, at the fund level, we have in the period processing in the TBAR console two tabs. The one that probably people want to look at is the transfer balance account tab. Now we've enhanced the screen so it looks very much similar to what the ATO will actually display, and in essence, think of this as a bank account that shows your running balance as to your debits and credits to your transfer balance account, and we're making sure that the member stays below that 1.6 at any particular time. We've added the concept of effective date and event date, and that is because in the instance of a reversionary income stream, the actual TBAR takes effect 1 year after the actual death. So therefore, there's this concept that when you do a reversionary pension, that you have a future TBAR record. So here we've got the TBAR console. We've got to add a column for the cancel records. So you can easily see that there's original record and a cancel record, and then in here, you'll see in time what your transfer balance is. So you may ask, why do how is this used in the application? So for Tom here, I've got 1.3. Oh, sorry. Let's go Susan. She's on 1.15, so she's got 450 left. Now, if I also go in and actually try to establish a pension for Susan. And if I slash for 500,000, it's going to tell me, because of tracking, that by the fact that you exceed the 500,000, you will exceed your transfer balance cap on this particular date. And that's the trigger point for you to go, okay, I need to review my T-bar to see either my T-bar tracking isn't correct, or actually I do need to check and see potentially the establishment of the pension is actually going to cause the ATO to issue me an excess transfer balance determination, and I may need to think twice about whether I want to establish that pension or not. So it's quite important to actually have these triggers, and we have that for the pension establishment screen, which is probably the most common one, and also the TRIS conversion screen, which we introduced as part of the T-bar work on event-based reporting. So that was the first change that we actually did. Now the second change we've done was, as we learn more and more into this, we found that there's some clients that actually breach their caps. ATO have issued the excess transfer balance earning determination, and as part of that, there was a earnings component in the ETB, and it was treated as, in essence, an adjustment to the transfer balance as a penalty due to the actual breach. So the notice would require you to actually commute a certain amount, and also, by that amount, the total amount includes the actual excess amount plus a earning that needs to be adjusted. So what we've done is, and what I'll do is I will do a pension commutation for Susan, and you'll notice it will actually tell you which pension you need to commute, and that's why we've got pension identifiers, which actually identifies which pension you need to do. Now if you use any of the reasons of ATO excess transfer determination or the commutation authority's request in full or in full jurisdictional funds, generally most clients get this, and what you will see is this field appears, which normally don't appear for other commutation reasons, and this is for you to actually at a time of processing the event add in your excess transfer balance earnings. So for example, I can say the ATO has asked me to commute 30,000. Of the 30,000, 2,500 is actually an earning, and I'll submit that. And you'll be familiar that there's the reporting requirement for ETB is different to the normal cycle. So we have a warning message there to let you know that you may have to report that a little bit earlier. Now, if I refresh this page, so what you can see is we've actually create a commutation event for 30,000, but actually the ATO has deemed an adjustment for the 2,500 earning, which means the benefit, the reduction in T-bar is only 27,500, and we're doing this so that your T-bar balance matches what's in the ATO, because it's exactly what ATO is going to do when they process this particular T-bar record. So a slight quirk, but certainly our job is to try and make this make this process as accurate as possible with what the ATO is doing, and probably there'll be more and more data examples coming through, and we will work through them to make sure that you have the most accurate calculation. So the next thing is the total super balance, which came about as part of the super reforms, and it's a new concept that gets determined by that determines a value that calculates at 30 June of each year, and the total super balance allows you to determine a whole bunch of eligibility of what you can do in the next financial year. So I have a quick table just to highlight all the things that currently is controlled by class. So you can see the third point about the eligibility and trigger for rules. So in essence, between 1.4 and 1.6, you're able to trigger the bring forward rule, but the amount you can trigger will actually change. If you're at 1.6, you are not able to actually trigger those rules. So the other thing that actually affects is the T-bar lodgement frequency. So for those funds that have members have less than 1 million, you are able to lodge T-bar records at different frequency for those that are over 1 million. The eligibility for DIN segregation for ECPI purposes, generally funds that are less than 1.6 are able to use the actual DIN segregation, and if you're over, you have to use the old way. That's going to probably change a little bit as part of the new budget updates. They came into the next financial year. But the one that I will come back to is the unused concession contribution, which is quite a big change that occurred as part of the super reform changes that took effect 1st July 18, but came into effect, but the first year where you're able to actually use some of these concessional contributions were 1st July 19, and class have done quite a bit of work to make sure that you're able to actually track that and actually reflect that information. So what we've done is, again, make this green, which sits in the contribution caps area, look more like what the ATO has. So breaking the class and external components, and then the structural settlement, which also is adjustment to your total super balance. But what we've also done is given the client's flexibility, because while the total super balance in most cases reflect the closing member balance, there is a wide range of situations where potentially they could be different, or you may have taken a fund on and you need to actually reconcile with the ATO as to what the actual total super balance is. So we have these adjustment fields where you can enter positive and negative numbers, and that will then allow you to adjust the total super balance to reflect the information that's been kept by the ATO. So our recommendation at 30 June is that once you've lodged a tax return for the year, is to actually check the TSB, especially that is kept at ATO, and make sure it's reflective, because in essence, so I'll go we're in the 920 year, but in essence, total balance at 30 June 19, which is the last day of the previous financial year, actually impacts on what you can do with your fund and your members for the next financial year. And the class is utilizing, making sure that the total balance information is correct for you to for class to make the right decisions about what you can and what you can't do. So that comes together. Now the question is, you have total balance and you have transfer balance account, but they're all sitting very deep in the fund level, and how do you get visibility across all of that? So what we've done is actually the last change of the TBAR TSB enhancements is to bubble all of that information up to the business level in the member console. So what we've got is a column called total super balance, a column called transfer balance. So this is the today's transfer balance at any particular time, and then the available transfer balance, which is this is the transfer balance cap 1.6 million minus your existing transfer balance. So then you can export this list, you can do filtering, and I can see I'll put a filter here, and we've added an additional filter. So I'm doing the one for less than 500,000 total super balance to then work out, and you're able to actually provide some strategies and some advice as to what the person can do in the upcoming year. So here I've got less than 500,000, which means all these members in theory should be able to carry forward any unused concessional cap they have not used in the previous years to the current years. But if they were over 500,000, unfortunately, they won't be able to actually do that. So as I said, you may be using total balance, and in most cases, you can see the total balance are going to be very similar to the total super balance. But what we've done is actually tighten up these concepts so that you are so you're using the most accurate information, most updated accurate information to make decisions for your clients. And to the last section, which is the super reform changes and the tax return. As I mentioned briefly, we'll have subsequent training materials and webinars potentially on year-end processing, which this all ties into. But I think it's important for us to go through some of those changes that we've made and how you access them. Importantly, how that then ties together to the actual tax return, and how you actually report them to the ATO. So we'll go through the first home say. Well, we'll go through the family downsides, the unused concession contribution. The other thing we've done was we've actually updated the custom holding account to add the deferred capital gain realized. So that was one of the remaining pieces of work that we need to do to make sure that for those that are selling and realizing deferred gains, part of selling their custom holding account, that you're able to actually enter that number for class to understand how to actually treat them as part of the whole deferred gain and CET relief. So for those small number of clients that are affected by this, and you'll know if you are, that additional field will actually help you to complete your fund for the financial year, and for you to get the accuracy of numbers for you to actually proceed to finalizing your fund. So we'll go through those quickly. Okay, so the first one we'll go through is first home, the actual first home saver. In essence, this is going to be very similar where the ATO have you clean money into your super fund, and the ATO at the will, and upon application, the ATO will provide the super fund with a release authority for you to draw some money for the purpose of buying your first home. So it's very similar to the ATO issuing a release authority if you have any financial difficulties or some kind of disablement. So therefore, if I go into the payments rollout, today's date. So you can see we have this additional option in the conditional release for first home super savers, and it's a pretty standard sort of conditional release, because all the information that's available that you need to will be on the release authority that you receive from the ATO, and you're able to actually process this event and actually take money out, even if the money is in a preserved component due to the nature of the release authority from the ATO. Now, we probably don't expect a huge amount of these for an SMSF, but we'll include it as part of the super reform changes, and this actually gets mapped into the tax return as part of the lump sum payment rollout in the member section. I'll show you that when we get to the tax return. The second thing, which is probably more common, is the family downsizer contribution. So from 1st July 18, for those that are 65 or older, that meet a number of eligibility requirements, and there's quite a bit. You may be able to choose actually to make a downsider contribution into your super fund of up to 300,000 per member, and actually bypass some of the concession or non-contribution caps. So the benefit of this one is that actually is a lack of requirements around when you can actually do this, because as long as you actually sell your home after 1st July, in essence, you've opened up a window for you to make additional contributions. So what we've done is, in the member income, member contribution screen, and if the contribution date is post 1st of July 18, you can see it's contextual based on the date. We've got this downsizer contribution. So as I said before, each of them must be over 65 at the time, and they can only contribute up to 300,000. So if I do 500,000, so as you can see, you'll get an error to say we can't submit this event because the contribution is less than 300,000. So it's more than 300,000. My apologies. So therefore, if I do 200, that will work. There's some additional requirements you have to do in terms of filling in a form to notify your administrator that the downside contribution has occurred. But the processing part is all done in class. So the last thing, I guess, from a super reform changes is the unused concessional contribution. I want to actually spend just a little bit of time touching on this, because this has quite a big implication on the way that a concessional contribution cap is thought about each year. Typically, you get 25K each year concessional cap, and then and it resets on 1st July of each year. Now, as part of the catch-up contribution measures that was introduced, you actually from 1st July 18, you actually accumulate any unused portion of your concessional cap that you can then carry forward to next year. So 1st July 19 is the first year you can actually use the carried amount for a 5-year period. Now that the actual usage of the unused cap can only be done, as I mentioned earlier, if for that financial year your total super balance is less than 500,000. So again, the total balance is actually quite important. So then, if I go into the contribution caps area, it's where you probably get the most, probably see that information. So if I go to 18-19, so this is the first year that we're actually accumulating the general caps 25. I've actually made a 17,500. So then, well, actually, I have $7,500 left in my cap. So provided that next year the member's TSB is less than 500,000, that can actually use the 25,000 plus actually 7,500. So they actually have, if they go to the 1920 year, which is the actual next financial year, they actually have 32,000. And this row called cumulative available unused cap is what will actually show the carry forward amount for the next from the previous financial year, and obviously that's because their total super balance is actually less than 500,000. Now if I use the adjustment field just to speed things up a bit, to adjust the TSB to be over 500,000, as you can see, that unused portion is 0. Now, importantly, you don't actually lose that amount. We actually track that behind the scenes. It just means you can't use that amount in the current financial year. But for next year, if your TSB somehow drops below 500,000, you actually can use all the unused component that you carry over for that 5-year period, starting from the 18-19 financial year. So as you can see, what we've done is actually reflect the information in the contribution cap screen. It's probably the screen that will give you the most detail for you to follow through. But then we've also made the change in the contribution cap widget, and it's just refreshing a little bit. And you can see it's gone back to 25. But if I change that, if I reduce the TSB by 100,000, that will show up the actual maximum cap. So the maximum cap now is not just 25, but 25 plus the unused component. And the other thing we also made the change is in the member console. Now the concept of contribution cap also includes the unused portion. So part of it really is actually talking to your clients about this new concept, and actually more that they can actually contribute more from a concession contribution perspective than the typical 25,000 general cap. Now, the last thing I want to go through is tax time 2019, and I would move pretty quickly here because the form really hasn't changed very much from the previous year. A lot of the changes are to actually to capture information on activities that I just spoke about, the downsizer, the first home saver. But one of the enhancements we've done in this area is we receive is in the printing, because currently what CLAS does is print, especially in the member section, 4 pages for each member, and plus two pages for the supplementary section, irrespective of how many members in the fund. Now, typical fund has 1 or 2 members. That means you're printing 6 pages every single time you print a tax return. And we understand that there's a bit of inefficiency. So what we've done is we actually enhance that to make sure that if you have 1 member, it only prints that 1 page. If you have 2 members, it only prints that 2 pages. Now, if you have any those members in a supplementary section, generally that means that those that have died or left the fund, it will print the whole 6 pages as the general template. But in essence, what we've done is increase the number of templates that we support to reduce the number of pages that you will print, and hopefully that will reduce some of the papers that you print, and also narrow down the number of pages that gets created as part of the actual tax return. So I'll quickly go through the actual tax return. So in essence, this is very familiar if you're a class client, and you will see, and I'll just quickly point out some of the major changes. There's some changes in the audit reports, and in essence, the ATO is trying to actually get more information as to the Part A and Part B, whether the audit report has been qualified, and you have to provide answer to both Part A and also Part B. That way, it is to gather more information as to the actual status of your audit as part of ATO's information gathering process. The other major area is mostly in the members section, and so if you come down to this last field called outstanding limited recourse borrowing amounts, so this is a new label that's been added mainly for the ATO to get some statistical understanding of the amount of limited recourse borrowing that is occurring in the SMSF sector, and so this is different to the limited recourse borrowing amount that you calculate for T-bar purposes. It's mainly informational, and it doesn't actually impact any of the calculation of your tax liability or your transfer balance account. So the other part where is if I go up is the proceeds from primary residence disposal. So this is the family downside that I spoke about. If you were to process the amount, we will actually push through the amounts you've entered, and also the actual receipt date, the date in which the event has been processed. So all that it's automated for you, and that just streamline the process. The other measure on first home savers will, if you're going to process that, as I said before, it will go into the lump sum payments area. So we've hooked all that up. The other thing that we've introduced, and again, part of the ATO wanting to understand, get a bit more insight as to the ATO industry, is on cryptocurrency. So if I go to any of the investment accounts, what you can see in the tax return classification, we've actually added a new category called cryptocurrency. Now, so we recommend that if you have any cryptocurrency like Bitcoin, any of those currencies, that you update the tax return category to cryptocurrency. And once you've done that and popular tax return, in the other investment area, we would then push through the actual value as part of this 15C disclosure to the tax return. So again, Limit request borrowing cryptocurrency is just the ATO wants more information as to what is happening in the SNF sector in relation to these two concepts. And again, so here I've got 2 members. If I print that, as you can see, it only prints 12 pages now. And then it's got member 1 and member 2, and it jumps straight into section H and the rest of the actual tax return. So while this is small, but we think our clients will really like the amount of sort of efficiency and I guess paper saving that it comes with the printing updates. So that's really all I want to talk about in a tax return. There's more details in our user guide on the detailed changes, and then also the ATO also publish each year their guides on the actual tax return. So there's plenty of materials if you want to read a bit further on some of the actual changes. Now the last thing, and I just want to quickly touch through, is some of the feed updates. There's been no demo of such, but just to go through some of the actual changes. So in terms of HUB24, class will notify your access controller when credentials have expired. HUB24 now support foreign non-cash assets. BT Panorama now support advisor level authorization for feeds, and users can close bank, broker, wrap accounts when their feed ceases. So those are some of the major, and there's a lot more feed improvements, a lot of things happen behind the scenes that you don't see, but these are the major changes. The other thing I want to shout out, which we released in February, is we simply increased the amount of DRP support that we have for our broker feeds. So you should see more of those DRP coming through, and provide a fully automated solution for the DRP at your each individual holding level, and we're doing a lot of work in that area. So that's the feed updates. So on that note, I'll conclude this webinar. As I mentioned, I'll be sending out a survey for your feedback. I will appreciate if you can spare a few minutes to complete the survey. Thank you for your time.